All right, beautiful. So, good evening. Okay, so let's answer questions. And please, let's make this call lively. All right. You're free to laugh. You're free to do anything you want to do. Just cap our meeting for us. All right. Lord, I thank you. When price does not give a clear a distribution or accumulation at a higher time frame point of interest, that is, price just came into the zone and starts moving rapidly in our direction. How do we enter such trade? Okay, man, there's no way I'll do this without using a chart. So let me see if I can share my screen and all right. I think yes, can you make me the host back so that I can you the recording continue on your end? All right, all right. So I can share my all right. Um screen. All right. Just give me some time. Let me open my phone trading view. All right, because the question you asked actually happened on USD card, I think last week. Yeah, last week, if I'm not mistaken. I and Tulu were looking at it together. It didn't give an entry. So I'm going to say two things. And one thing I know is anything I'm going to be saying is necessarily not new. And is necessarily not new. And the second thing is I don't know. Let's see. All right, so let's start off with this. So you can see how price was creating series of higher, higher low, higher high, higher low, higher high. Came back to create an higher low. This guy kind of swept this liquidity before going up. That was clear, but that's not what we're looking at. Now you see that, but look at this place. This is the place I want you to focus on. When price came into this potential area for reaccumulation. Now in this zone, on the 5 minutes, five price did not give an entry. Let's see how we can narrow down our charts to that zone. Let's see. I hope price shows it. I really hope price is gonna show it. All right, perfect. All right, yeah. Now keep in mind that anything I'm doing, we are doing using price and time. All right. So you see my section is below. So you know that all of this happened during now price came into and then went up, right? Came down again. I'm trying to show you something. Came down in that bearish price action, high, low, high, and then gave a break of structure somewhere here. Gave a break of structure somewhere here. Now price never came back. In this kind of trade, you can now, this is the kind of trade they'll tell you not to chase the market. If price didn't come back, just let it run. Just leave it. Just leave it. Just leave it. That's the first thing I'm going to say about that trade. Now let me put this line here and paint this line, let's say red, so that I can remember. All right, now the second thing I learned is from Matthew. Now, this is exclusive to you. Your risk is involved. If you know you can't take the risk, leave it. If you know you can't take the risk, leave it. Now, what Matthew does is now immediately price breaks, it tries to put a limit above this place. Now, that was what I and Tolu was saying that the RRR was going to be very much like the RRR is not much at all. Wow. All right. The RRR is not much at all, but Matthew will always put a trade here, we take an entry here. That's immediately one candle closes above and breaks structure. Now, price and time. And then we are bullish. Matthew is going to take a trade and then he's just going to take the risk. But personally, for me, I don't think I can do that. What I'm just going to do is just leave my trade and push down. If price does not come back, then I'll just let it go. Do you get? Now, it always happens that price normally comes back to that zone for a re-entry. Price normally comes back to that zone for a re-entry. Um, I'm coming. All right. So you can see our price came back to that zone, right? In 5 minutes, you can see that. But this time around, it didn't happen during London, New York section. You can see that price came down, and then immediately it was London section, price went up, came down, and that. Now, I'm generally just trying to tell you that price did not give that entry. These are the kinds of trade you don't pursue. You just leave it, let it go. Another opportunity will come. Of course, we always say the market is what? The market is full of abundance. Now, one other thing you could do is identify current trading range on that time frame. Like this, for instance, if you took it here, price would have taken you out. If you took it here, this guy would have taken you out, and then you lose that trade. But best thing I can just tell you is don't chase the market. Just let it go. Now that's the first thing I said I was going to talk about. I was going to tell you on a trade. Second thing is, which I've said over and over again, is if I am going to be risking, let's say, $10 on this trade, right? Now I am going to take $6 and risk it at this higher time frame point of interest. 50% should be somewhere here, right? My stops below this low here. My targets above this high here. That's almost like a 1 to 3 already. Yeah, that's a 1 to 3 already, right? That's my $6 here. And then I'm going to take my impute my remaining $4. How many people remembered when I said this thing about how I split my risk? And then other $4, right? On that 5 minutes time frame entry. Now, all in all, I might not have gotten that $4 entry, or my $6 entry is actually going. Now, the reason why I do this is because most of the time I might not be on the chart to take a 5 minute entry. So I know that when price gets there, it's going to activate me and then go my way. All in all, even if I'm going to lose any trade, I'm going to risk $10. I'm going to be losing $6 or $10 if both did not go my way. Of course, before you enter a trade, you should know how much you are risking. You should know that, are you willing to lose the $10? If you are willing to lose the $10, I don't know why you get angry if trade hits your stop loss. Because before you enter your trade, you have already planned it that you wanted to risk the $10. All right. Okay, so I believe I answered the first question. Let's go to the second question. Second question, waiting for price to get to a higher time frame point of interest might always take long. Sometimes price may not even get to it. How can we identify valid place to? Okay, I only take trades in two places. I take trades at the highs or at the lows. I don't take trades in between. I don't like it. I don't like it. So it's either I take a trade here or I take a trade here. And honestly, if you investigate this chart very well, there's entries. Like on this place, I think Tolu was the one showing me how price actually distributed above this highs here before dropping. Now, where were you here when price created a new high? We've done structure times and times again. When to the valid time for you to take entries. When your external liquidity has been taken, you aim for what? Internal liquidity. When your internal liquidity has been taken, you aim for external liquidity. So now in this kind of trade, in this kind of hard charts now, you already know that price is going to go. Price is aiming for external liquidity. Why should you say you want to buy at all in this kind of trade, even if you see a buy? I sorry, sell. All you should be aiming for is a buy, and that buy is right here below. Where's my brush? That buy is right here below. So one thing I can just advise you to do is don't chase the market. Honestly, see, don't chase the market. You see this game, this trading of it, the only way you can really be maximally rather profitable is when you are patient. honestly, when you are patient. Honestly, I understand the fact that there are a lot of things you want to use money for, there are a lot of things that need to be sorted out. But I've said this over and over again, and I want you guys to bear me witness. Which is better? Is it having a blown account when a trade then comes, you don't have trade, you don't have money in your account to trade, or having capital preservation? Everybody must go for, everybody will see capital preservation, but people that will say capital preservation, they're still the one that will not that will not preserve their capital. So I hope you guys are hearing me. Hope I'm not alone on this call like this. Hey, okay, I'm not alone on the call. So I believe everybody is hearing me. So that's how to take the trade. Wait for external liquidity to be taken, wait for internal liquidity to be taken, and then you can trade. Let me see. Are you in phase three? Yes, you're in phase three. So reference internal and external liquidity training video by Ancho Bastin. Yeah, that's the reference. Third question. Ah, no, I can't. We can't be answering four questions for only one person. Now, let me answer three more and take other people's question. When price does not get to our higher point time frame point of interest and starts distributing or accumulating just below or just above or below POI, is such trade valid? Okay, let me see. Let me answer this question with, let's say, GU. GU. Now, there are various points of interest which, how do I explain it now? There are a lot of points of interest. Now, for this trade now, look at what happened today. This trade has break of structure, but as this is distribution above the highs. Aside distribution above the highs, price traded into an IPA, and then above here there was an entry. I have to still look at it today. So remember, I used to say one thing: keep an open mind. People make the mistake of they want markets to go to do what they tell the market to do. They want market to do what they tell the market to do. They don't want to do what the market is telling them to do. What do I mean by that? In like, because you are seeing a sell, you totally shut out your mind on a buy. And I used to say this thing. I think the last trade I shared on the Nasdaq, I clearly stated that although we had an H1 break of structure to the upside, I'm keeping an open mind to buy while I'm also looking at the sell. Keeping an open mind. Just keep an open mind. Don't try to say because you are seeing the sell, this is price is already at the higher, at the lower high, because that's where we take trades from for a sell. Price is already at the lower high, it must sell from there. Price might decide to break structure and continue being bullish. So I believe I answered that question as well. All right, next question. Is any question in the chat? All right, no question is in the Zoom chat. Let me see. Um, all right, so the next question. Nobody is sending in their question. Is everyone hearing me at all? Hey, you
We
guys
can
have
hear
left
you,
me
sir.
alone. All right, so any other question? I've answered 3 questions already, and I'm not seeing any other question. Hey. All right, this is particular on Nasdaq trade, sir. Sir, looking at Nasdaq, the M15 gave a distribution but did not return for entry. Then price started creating liquidity. Looking at the N3 time frame which you used for your entry, please can you go over your thought process while you were planning to take the trade? All right, everybody wants to see how I took Nasdaq. Well, one thing I'm going to say about Nasdaq, in which I would not lie, is that I was on the chart at the right time. That was the only thing I'm going to say. I was on the chart at the right time, and I will show you the reason why now. All right. Uh, um, 5 minutes. So, wow. Hey, you don't break. Oh. But then I'm not trading again. Tomorrow is another day. All right. Where did I even take that trade from? Sorry, give me some time. Let me look for my trade idea. All right, so I see the trade from somewhere here. Like I said, I was on the chart at the right time. Now, remember I used to tell you time and price is key, and I don't know why people still don't use time and price as the confluence. All right, so you can see how price was doing all of these things here. So, uh, so we had this high, this low, this high, this low. Price broke structure to the upside, came back here to reaccumulate, then did all of those things, did all of those things, did all of those things until it broke structure here and then came back here. Now, I didn't know for whatsoever reason that I don't know.
This is unfair. This is unfair.
Now,
Nobody invited me.
is that Mel's?
Okay.
That's Mel's. Mel's is on the
But
call.
you
My
know,
boss.
she the one. I mean,
My boss. All right, now this is why I said I was on the chart at the right time and God helped me. All right, so let me say I placed my limit somewhere here. Now, ideally, my stop loss should have been here. And if my stop loss was here, that was above that high, price would have taken me out. But for whatsoever reason I did not know and I cannot still explain to you now, I decided to put my stop loss at this high here, just above this high here, this very high here. That's this place here. I just placed it here. Now, reason because one spread price during the North New York section or something, it might get a bit large and then spread might just come and take me out. Two, weak. They might just decide to weak me out at that high and then they drop and still close in structure, which was the reason why I placed my trade, my stop loss there. Do you understand? So now, if you had placed your limits here, now when I and Tolu were talking about the trade, Tolu was like, in which was true. People that saw this break of structure, this one previously, and then their stop loss was here, they will have lost the trade and just given up. But like I said, I don't know. I was lucky. Well, let me call it luck. But I was on the chart at the right time. So all of this has happened. I came on chart somewhere around here, somewhere around here. So all of this didn't happen in front of me. So immediately I saw all of this thing, break of structure. Okay, quickly set my limit, place my stops above that high, and boom, that was my first trade. That was my first entry. My second entry, uh-huh. My second entry, which was in 1 minute trade. Okay, where is it? More, more. Okay, I've seen it. So let's go back a bit. Man, it's not loading. What's going on? Okay, yeah, it's already loaded. Here's the second entry. Here was it. Beautiful. Current trading range, like you can see. Low, low, high, lower low. Actually, then the 50% of this, and then that was the second entry. That was my second entry. So, like I used to say, I splitted my risk. The first money I wanted to put into it was on the 3 minutes, and then I decided to just take this risk by putting the second one here, and then, mhm, and that was how I took the second trade. You understand? So that was how I took the trade on Nasdaq today. All right, let me see. Any other question? All right, let me go to the chat. All right. All right, so I've answered the 4 questions. Nobody has any other question. You guys can unmute to. Don't worry, I'll not remove you from the call. Oh yeah, oh, wow. People not only get question again like this.
Yeah, just come with the others. So the first one, really nothing that they.
No, now you now your way. You're a big man now. So you have left us in forex. You have left small boys like us in forex. But we are not angry. We are not angry.
You are lying.
boss.
You are lucky.
All right. Which particular session indicator are you using, sir, on your phone? It's the same indicator I've been using right from time, sections indicator. So the way to put it is you come to your indicator and then you search for trader. Ah, yeah, scatter. I'm coming. Uh, I'm coming. All right, so you click on the indicator and then you search for sections, and then specifically for the sections by trader, something. I'm coming, I'll show you now. So it's the same indicator I use for my system that I use on my phone. I just signed in my trading view on system to my phone. So it's the same thing. All right, so you can see that now. Let me munch it before so that I can place it. All right. So you see that now. Sections by trader 859, and the rest. That's the trader, that's the sections I use. And then when you put it, you can then come to the sections place here, and then you can put it, you can do your settings as you feel like. Let me even see. Well, there's a setting dialog there. I don't know why it's not coming on my phone. So I don't used to like scattering my settings. So it's the same thing, it's the same sections I use on my system that I use on my phone. Nothing different. Sections by trader, it's something. All right. So question has been answered. Yes,
Boss.
now Mel's is already working in Chevron. I be sure them.
Yeah, I have a
Don't
question.
get money anyhow. Any question? Is there any question in the group?
I
No
have a
question in
question,
the
please.
group. All right, I'm with you.
All right. Good evening, fam. Good evening, boss Philip. All right. My question is
Yes, sir.
as regarding what's it called? Risk management. If you're having, like, as you took double trade today on your NAS, your first entry, let's assume you're risking $10 per each entry or per entry. Your first entry, you risk your $10, then you happen to see a chance for a re-entry. Are you going in with like another $10, or you'll probably split your first one maybe 50-50? I don't know if you get me, sir.
Okay, now I'm not personally the way I trade. Now, this is exclusive to me. I'm not saying this is the way people should do it, but most people just used to like, let me say, do it my way sometimes. So now, like I said from the onset, any trade I'm going to enter into, I used to have a determined money I want to put into the trade. If I've lost that money, I'm done. Only if I want to risk another one. Let's say, for instance, my account is okay. Let's say, for instance, my account is $100, and I want to risk $10. If I lose that $10, now if I feel like risking another $10, that is when I am going to enter into another trade. If I don't feel like, I'll rather just take my loss and leave the market. That's one. Two, I split that $10 into how many positions I want. And most of the time, maximum just two. Like just two, and I'm good. Just two. So my first $10, I might split it into 60-40. That's $66 on the first trade, and then $4 on the second trade. That's the way I do my risk management. And it has worked for me so far. That's one, that's another thing. And then I don't enter trade because I see an opportunity. All my trades are really planned. I'm coming from somebody that does not even like staying on charts for long. Like I just like taking the trade, leaving the this thing, come back. How did it go? Oh, it is stop loss. Glory to God. Oh, I'm in profit. Put my trade at break even. Wait for it to reach take profit. Oh, I'm up 1 to 3. I take out partials. My account is up 2%, 5%. When I'm at 1 to 5, I take out another partials by closing a full 1 to 3, which means $10, $30 as 1 to 5. I don't know if you get that concept I just said. I'll come again so that I can help everybody. Like when I come back to the trade and then my trade is already at 1 to 3, I close partial. 1 to 5, I close my full partials for 1 to 3, which means I $10 for $30 at 1 to 5. So the first one might be, let's say, $20. So I take out $20 out of the trade, and then the second one I take out another $10, making $30, and then I'm at break even, and then I leave the other trades to run. If it reverses to take my stop loss, no problem. If it continues to it, I take profits, no problem. But I'm already managing my risk at 1 to 3, 1 to 5. See, guys, the only way, like emphasis on only, the only way to consistently build your account or to consistently enjoy profit in the market is by taking your 1 to 3, 1 to 5. See, NASDAQ went 1 to 83. If you reached $5 on that trade, you would have been up 400 and something dollar on that trade alone. If you reached $5, meaning if you reached $10, you would have been up maybe like 800 and something for that 1 to 83. I don't want to take that 800 and something at once. I don't want. I'm okay with my $15. I'm okay with my $30. That way, I know I'm experiencing a consistent growth. I'm not growing at once. Like, I believe you understand the word I'm trying to use. I'm just trying to be very, very lenient with my vocabularies. So the only way, see, I told you, and like I said, some people will still not hear or long, they will still not hear. Your account is $50. It's already $60. That's how many percent of that account? That's
10% of $50 is $5, 10% of $50 is $5. So if you are at $60, that's 20%. Your account is already up 20%. Do you know what that is? But no, because one day that very 20% that $50 became $60, one day it is going to be $500 to $600. One day it is going to be 5K to 6K. One day it will be 600K to 700K. If you can continue consistently, Bible tells us that we should never what's that word now? How did Bible use it? Why am I forgetting this thing? Don't despise, yes. Don't despise the days of little beginnings. These days, nobody wants to enjoy the days of little beginnings. They want to blow once and for all. And like I said, there's this example I used to use, and I wish everybody can practicalize it. If you stand up now, right? If you stand up now, if you jump up, what will happen to you? You are going to come back down. But if you continue to increase gradually and you continue to grow, you are going to stay up. Meaning, if you jump up, you are going to come down. But if you grow up, you are going to stay up. I don't know if you understand that analogy. If you jump up, you are going to come down. Gravity will pull you back down. But if you grow up, you are going to stay up by laws of growth, whether you like it or not. Whether you like it or not. Right. So, the only way to enjoy your account growth, the only way to experience growth is by what? Enjoying your consistent. Go and check. I wish Coach Tony is going to send you guys when he started with Vic 75 from one asset on Vic 75. And this was what I was saying earlier. You look at 3, 4, 5 assets at once. Your head, you are not a computer, honestly speaking. Now, consistently, it was on his 1 to 3, 1 to 3, 1 to 3, 1 to 3, 1 to 3. It's nowadays that I'm even surprised that coach is taking swing straight. Yes, I'm a swing trader, but before I swing, hey, I've zeroed my mind that I'm not going to be angry if this trade reverse. If this trade reverse and takes me out on stop loss or break even, I'm not going to be angry. That's when I know I want to swing. But that consistent growth, your consistent 1 to 3, your consistent 1 to 3, your consistent 1 to 3. We have done this thing over and over again. How to be your trading, all the affirmations. I am a disciplined trader and all of those things. Reference to my calls, you will get all of those things there. And I believe I answered that question. Let me stop talking on that question. All right, next question. 12 charts. I like this person that said marathon is better than sprint. Thank God today I was listening to this message, 3 most important things. And someone was saying something in that message like, if character and virtue, if they run sprint, somebody is going to win. And then if character and virtue, if they run a marathon, the character is going to win. That's exactly what we're trying to say here. That's exactly what I'm trying to say here. Okay. Yeah. Actually, based on moving averages. That is a first one. I'm looking for 1 to 2 million. Can you imagine? Make all of us enjoy little beginnings. Bells, don't answer them, bind them in the name of the Lord. Hey, everybody, small beginnings different.
I need to arrest Nancy.
All right, next question, please. Let me stop joking. Next question. See, don't be afraid of asking questions. Hold arms do not get bread. If the question is stupid, ask. It might be the changing thing for your trading. Ask.
All right. Next question.
And if there's no question, I'll ask question. And I'll
Yeah,
start calling out
I have a
names.
question. I have a
All
question.
right. All right.
Coach Philip, I have a question.
Oh yeah, ask.
Um, is every removing artist first?
Yeah.
Then my question is this: yeah, how do you actually let's go with can you hear me?
Yeah, I can.
Yeah. So I'm
I
like
can hear you. But wait first.
to be realistic,
Wait first.
there's this
Is it just
urge
me
by
or Mel's voice is not thick again? Mels has done plastic surgery on his voice. Okay.
feel that why we okay, so I beg every removing artist. I beg. Coach, every removing artist. Okay, so my question is actually this urge, there's always this urge to trade more than the assets that you actually plan to trade. Because as a person, you might decide to trade like 5 assets, sometimes you might decide to trade like 6 or something. Or you might be seeing setups on other assets. Yeah. Let's be factual. I'm guilty of this thing like a lot of times. I might decide that I just want to trade 5, I just want to trade 7, I just want to trade 6. And I'll find out that at the end of the day, my watch list is like 13, 14 to 15 assets already printed.
Guy, all of
So
us
how
they
do you
guilty.
actually
Males go
like
even go
I'm looking
synthetic,
for I
go the
don't know, I'm
pick
looking
asset.
Oh God, no.
so it's always like it's always very, very tricky. But at the end of the day, you find out that you're trading the asset that you're not planning. At the end of the week, because sometimes I look at it like at the end of the week, you might look at it and say, wait, I plan on trading those 5 assets this week. But at the end of the week, I'm seeing 15, I'm seeing 20. So I know that they used to say discipline is always a deep part of it, but I don't know. Will I say discipline no one they work again?
I'm
So
a coach.
yes,
May I get
what
question
how
regarding
do
this
you
male's
actually structure
question?
yourself?
All right. So you add your
You
questions so
want to ask
that
question for my
I
question?
answer.
Eh,
So that we can answer it at once.
so this idea of sticking to one asset, how does it benefit
Yeah.
people that like swing traders now, knowing that you might not even say set up for like a week?
Okay. Okay. As much as I know, it is very, 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 very tempting for you to be sitting on your hands. Preservation. You should know that you are preserving your capital for your. Yeah, we are sniper traders, and I think there was one time I told some people to go and watch film on snipers. Have you seen the life of a sniper trader before? They can absorb a target for 2 months, 5 months,
We dey see
6 months
you.
before they take their shot because they don't want to waste their bullets, they don't want to waste your money, and then they are precise. So that's the reason why less is more for sniper traders and swing trader because one hit, like one trade, can make them all they need. That when they are waiting for another trade, what they gained in the last trade
Huh?
is still
This is
sufficient
not
to hold them for the
Huh?
next trade. That's the first thing I'm going to say about that. Second thing I'm going to say is, you see my quote, eh? If you open my phone MP4, it's only the assets I'm trading that is here. Because I like setting my limit based on my broker's speed, not based on trading view sheets. So any analysis I want to do, it's only maybe when I want to send out the analysis to the group of people. That's when I'll now open my trading view on phone. But you see my this thing, nothing. Well, I feel maybe me based on it because of they used to say Jesus Christ learned obedience based on the things he suffered. Maybe because of the things I've suffered and now I've lost money to other assets. When I remember those days, nothing
Coach,
Trade.
we have suffered.
No, you have not suffered enough.
Our
You have not. You have not. If you
support.
have suffered enough, you will not do it
They wish me suffer.
again. You really would not if you have. You really would not. But like I said, see, guys, less is more. Let me use Charles as an example, and I hope he's going to forgive me for doing this. Now, I think one time he was trying to pass his FTMO account and all of that. And he reached out to me like, okay, he's having a problem passing his challenge and everything. And I told him that, see, just focus on two, three assets. And in less than 1 week, focusing on two, three assets, he discovered that he was able to pass his account, his challenge, and he discovered that his problem was because he was looking at one trade and then he was making money on one trade and then putting it on another trade. Then later on, he now came back to me and then he asked, after he had started making a whole lot of profit, glory to God, he now asked, like, okay, at what point can he start like looking at other assets and everything? And I told him, I made an illustration of, look at Matthew, for instance. He only trades the majors. Look at John Fitz, for instance. He only trades indices, GU, EU. So these are people we follow. So if you say you are following somebody, that means anything the person is doing, that's what you should be doing. So why are you so different? Thank God Fortman sent that video. So go, let's reference that video again. As a student, you are not allowed to change the curriculum. So when you start trading so many assets, you're already changing the curriculum for yourself. And that's the reason why you keep on failing. No offense. So I believe I already answered that question. That today God is going to deliver a whole lot of people from trading many assets. From trading so many assets. All right, coach, sometimes you mark up your POI and price terms to mitigate out of the wicks instead of the body of the candle. Is it advisable to take that trade or valid POI is valid POI is anywhere below the wicks, or how do I explain it now? So all of the wicks that hide the wicks. So immediately anything closes above it, the body of the candle closes above it, the POI has been violated because that would be a break of structure. So it's not necessarily the body alone, because it might be a wick on the 4 hour and it's going to actually be a candle on the 15 minutes. So it is still a valid POI. All right. Watching 2 or 3 assets is very profitable, but you go wait there, find something else to get busy with. More studies, I suggest. Exactly. More studies. More studies. More studies. All right. I beg, what to be this, that NYSC stuff? Okay, NYSC stuff is actually when the indices, when they are opening. So our time, New York section is 2 o'clock our time, and then NYSC is 2:30 our time, just 30 minutes after what's it called now? After New York opens. That is when the indices, that's when their company opens, right? Yeah. So I believe that's the answer to that question. All right. Any other question? Any other question? Of course, I'm not saying I'm perfect. I'm just trying to give you my own opinion. Yeah, of course, you can decide to search around, be different. I'm not saying you must follow my steps or my advice. You know, they used to say a wise man will give his counsel as an advice. So that's what I'm doing.
Hello, coach.
Yeah, I'm with you.
I want to ask a question. Sometimes you mark out your point of interest and you realize that market is about closing. And probably you might have put in a limit there. And all of a sudden, when market closes, you see that the spread begins to widen so much. Oftentimes, I kind of delete it because I'm kind of afraid the spread might take me out. Is it advisable that you either you keep the limit there if you are probably um, somehow sure that the trade might go in your favor, or you just delete it in case of
All right.
anything.
If the trade is going to go your way, when market close, the best thing you can do is to close the asset, is to close the trade. That's if it has not started. If it is in profit, take your loss and leave, and then wait for London, New York. There will always be entry. You will just identify the current trading range and then look for your entry. It's going to move so much before London, New York. That is not possible. Maybe 2 times out of 10, that's when those kind of thing happens. Maybe 2 times out of 10 times. You understand? I think there was one time too, it happened to me. It was a trade on GJ. Even coach too. We're all on that trade together. I don't know how many people remembered. So spread took me out, and then when London came, I also saw the 5 minute distribution. Yeah, I think it was a sell trade that time. So we saw the 5 minute distribution, and then I just entered, and then price continued dropping my way. So it is better. The thing is, we need to treat trading as a business. If it is not in trading time zone, you shouldn't trade. I think there was one time coach was like, he doesn't trade the section. That's his pattern of trading. For me, on NAS now, but it's not my trading time zone, and I'm not going to trade it. And like I said, see, I want to enjoy my life long. I want to live a very long life. So me staying on charts for 24 hours a day, 7 days a week does not make sense. Let me know that I'm on the chart for London section and nothing is disturbing me. I'm on the chart for New York section and nothing is disturbing me. That's my trading time. That's my business time. Nobody just fries into that time. You get that. So the answer to my question or my candid opinion is close the trade when it is not during the time. If the spread is not in your favor, just close the trade. Wait for London section. You will surely find trade. You will surely find it. You will surely find the trade idea. Or you will surely find it. You just identify a valid point of interest. There's no how. There's no how. In fact, let me tell you something that we discovered of recent on London Mojo. Things on GA, GU, and GJ. We discovered that during the Asian section, they'll create an eye, an Asian eye, and then they'll come down to take the previous day low, and then they'll go up to take the Asian eye. So that way, you know that there will be, there's no how. There's no how. Only if you are not seeing it. Only if. I can send you a lot of charts to confirm it. I can send you a lot. I believe I also answered that question to my best knowledge. All right. Okay, so next question. Okay, let me say last question before we call it a day. Last question, and then we can switch to Telegram. Okay, very much interested in the chart. All right, no problem. No problem. But then instead of that, why don't you backtest? Backtest London section, New York section. Backtest it. But then I'll still send you one or two. I think I still have like one or two on my phone. I'll send them to you. All right. I believe that will be the last question. Any other question before we call it a day? Is Fort still on the call? Fort, Fort has, Fort has run away. All right. So in the absence of any call, guys, have a great night rest.